Hey everyone, welcome to another video. Today we're going to break down what a real trading session looks like. This was setups that I took on Wednesday night to Thursday morning. This was one of the days where I decided I wasn't going to trade, and actually I took all of these trades and all of these markups were done while I was in my bed, and that's why I took all of these trades. I was asleep during a majority of the time, so I let some of these trades run while I was sleeping, wake up, hit stop loss, wake back up in the morning, took some trades. So these are all the trades that I took that day. So you're going to see that these trades were over a 12-hour period of time. They were not just during the typical London, New York session. Now, what does a typical trading session look like for me? For anybody, everyone's a little bit different. In this case, we took 3 losses before finally hitting our win. Now, this was on GU. Our win, we ended up hitting 24.44R, and with 3 losses before that, we net about 21.44R for the session, which pretty good to me. So I haven't been trading too much because I'm working a lot in my business. Now, this week I did trade 2 days. So the day before this, prior, I didn't make a video on that. If you saw my Instagram stories, sometimes I share some of my trades and some of the links. I traded 2 sessions or 2 days this week, and we actually did pretty well. So I'm going to break down this one just because I didn't delete the chart all the way yet, so I have all of the stuff still on here. Now, for a majority of these trades, I was actually asleep during the time while some of these were running. So I'm actually going to explain a little bit on that, but what I want to go over first is I'm going to show you how I was preparing for the session, because I did my markups during early Asian session. I had decided I wasn't going to trade, but then when I was watching the charts from my bed, I saw some of these setups appear, and I was like, you know what, I should take some of these. So all of these trades were taken from my phone. I have screenshots. I added some of those to my Instagram story if you saw them, but let's get into it. So first things first, let's jump to the 15-minute time frame. We're already on bar replay, so we can kind of go back a little bit. Now, before these trades were visible, where I was in that session, let's go back to bar replay here. Where is this? Let's go back more. So we want to go to here. This is basically around the time when I hopped on the chart to do my markups. So in this case, I'm not going to go too much about the higher time frame. This is my second time recording this video because somehow the first video that was 51 minutes did not download properly and it's not working, so the file is messed up. So we're just going to go over like this. So the prior session, I had took a trade somewhere around here. I think it was here that I got an entry, and I got the rally to the upside, and I hit 23R the day before. And then the day that I'm showing you my markups for that I traded, we hit 21R. So that's pretty good, almost 50R for the week on 2 days. So first things first, how I do my markups in this case, we're just going to focus on the 15-minute time frame. In my mind, the way I see this, if I take a look back, I can see that the 15-minute is trending bullish. So I'm just going to continue 15-minute bullish price action until it fails, right? So in this case, we had just recently, earlier that day, broke the 15-minute structural high. Now, usually when we break with a wick, right, usually that's like a sweep. So I want to make sure that I get a body closure, and we do get body closure here, right? So above that wick high, we have body closure. So in my mind, now what I'm looking at is this. I'm looking at the current range. So we have this low that broke structure to the upside, and then we have this high, and we've already begun pulling back. So in my mind, price action is bullish, so I'm going to look for areas to long. So here would be the sell to buy order block that broke structure to the upside, that took liquidity before breaking structure. This is where all the volume was injected. So on the 15-minute, the 15-minute visible POI is this one. Right now we do have, let's say for example, this extreme that has a fair value gap just in between. You can see here we have a gap. Here we have an inside bar that was kind of mitigated. And if we go to different time frames, we can kind of see what those POIs look like. The unmitigated portion, let's say, is that wick. but realistically speaking, this is the source of the break. And when we look at this area, for example, after we break structure to the upside, oftentimes we can expect a pullback into an area like this, which is where we can get continuation to the upside. So at this moment during Asian session, that's kind of what I was looking for. Now, because price action here isn't super clean, we do have this swing here. For example, the swing that actually broke from the area that took liquidity would be here. So from this low, pull back and then break, right? So that's the most visible swing that we see. So I can mark it like this, make it look clean. And then because price action isn't super clear here, I don't have 15-minute visible liquidity, but we do have a gap in price here. Price could come back down into here somehow, maybe to mitigate this area or just tap the actual order block in itself. So when I don't have clean price action, usually what I'll do is I'll go to the 5-minute time frame. So on the 5-minute time frame, let's do some markups here. This is kind of what I was looking at. So here what I can see, for example, is we break candle body closure on the 5-minute, price gives a pullback, doesn't take out this low. So the swing in this case, this is what it looks like. We pull back, we break to the upside, we pull back, we fail to break, so we give a reaction, and then we eventually here we do break. So this is kind of what this looks like. So in a way, this is internal to the swing. This is just an area of continuation. But on the 5-minute time frame, what I'm going to use this is to show here, for example, that this high breaks here with the wick, but then we have candle body closure above. Actually, let's make this a little bit larger so that I can make sure you can see it, because I know my screen is pretty large here. And then, considering that this is the area of pullback that broke that high, I can go ahead and say that this area on the 5-minute time frame was a swing that actually broke, right? So here we're gonna mark this out like this. So on the 5-minute time frame, we have this low. Let's clean that up a little bit here with this. That low that makes this high. There we go. So that's the swing. And what happens is after we break this high, we pull back, we take out that 5-minute. The 5-minute then becomes bearish in that case. Now, on whatever time frame I'm looking at, let's say usually on the 15-minute. If I have 15-minute structure, once I get a structural break, I will drop time frames because my goal here is now to see when is price going to begin pulling back. In this case, for example, the 15-minute swing is this low to that high. So if price was going to go bearish on the 15-minute, it would have to take out this low. That would be a pretty significant pullback from that highest point. And so in order to not have such a big range to be watching that's almost 100 pips, what I'm going to do is I drop time frames, right? So for example, that low or that high. This high would go, that means we have continuation, and this is another order flow range forming. We take this one, we have 15-minute change of character. So on the 5-minute time frame, I can kind of clean up the space. Now I have this high and this low on the 5-minute, and 5-minute then shifts bearish. So now what I have is this high to this low, and that's what that range looks like. This is a bearish swing on the 5-minute time frame. So for example, now either if I'm going to get another 5-minute break, and now we can get rid of that gap area that I was looking at. For the 5-minute to go, let's say, and continue bearish, to get a second break on the 5-minute, let's get this here, we would have to take out this low. This would be a second break of the 5-minute because this low makes an external high on the 5-minute and then changes character. So this is external 5-minute change of character. So it's not internal, so this is a pretty quality swing here. So if I get this break, it's basically a confirmation. Now I like to use one change of character, or like let's say a change of character as like one that gets taken, and if I get a secondary one, I call it a shift in price action. So that's actually more commitment to me, because oftentimes price will sweep liquidity and give you fake changes of character or failed changes of character all over the chart, right? So in my mind, now instead of having to monitor this 15-minute low or that 15-minute high, Now I've narrowed it down from almost 100 pips to now I just have to watch, and it's still a lot, but about 70 pips, right? So prices are already dropping below. If this low goes, we have confirmation that we're shifting bearish. If this high goes, then the 5-minute shifts bullish and aligns with the 15-minute structural bias. So that's what I'm noticing, right? Now, for example, from this high to this low, right, this break that happens here on the 5-minute time frame, we always want to watch the extreme. And the extreme happens to be an inside bar, and it was somewhat tapped right here, for example, right? So here we tap, and then we push to the downside. So in a way, this could act as liquidity, but it failed to break to the downside. So we already know this is weak. So in my mind, I'm not considering this area to be something strong. More than likely, I'm expecting this area to fail. As this so far has failed to break the downside. So it's unconfirmed strong, right? It's unconfirmed strong. It's technically weak until it becomes strong. But on the 5-minute time frame, if it aligns, right, it makes sense to go bearish there. So what I do in that case is I'm looking for potentially just a reaction. Now in the 5-minute, I do have a 5-minute bearish engulfing candle. So buy to sell, that sell candle is engulfing to the downside, but it still fails to break. So in my mind, if price comes to this area, I'm expecting at least a reaction. It doesn't mean one has to happen, but a reaction could happen. And then potentially, what are we going to do? Well, maybe the 5-minute continues bearish to bring us back to an area for a buy. And that's what I'd be looking for. And then I would expect, okay, well, now this is a good point of liquidity. Price is probably going to go long and then give us something like this, right? And then break structure to the upside. So up until that moment, that's what I'm looking for longs. Now, in this Asian session in particular, I'm not trading. So I'm just watching price action develop throughout the rest of the day, right? Now, when it gets close to the time when I'm going to trade, around like 11 p.m., I'm already in bed and I'm not sure if I'm going to trade. Now, I notice that, hey, price never came back to my area. It's not coming back to my buy zone. So what's going to happen? Well, a couple things could happen. In this case, price had a pullback, but on the 15-minute, let's show you the 15-minute again, we have a big fair value gap, right? We have an imbalance of price action. All of this area here is internal on the 15-minute. Now, 5 minutes a little bit different, but still, this is internal price action. So for example, everything here, right, we have to have price either take out this low or take out that high. And if price is going up and we still have not satisfied this demand for continuation, what this tells me is this is some sort of manipulation of price. So this buying that's happening during Asian session isn't quality buying. So it's more than likely like some sort of low volume buying that is occurring. And so what I'm looking for is, well, if I believe price has to pull back before continuation, because all of this is internal on the 15-minute and on the higher time frames, I'm not expecting this area to really hold. So at that moment, even though structurally on the 15-minute time frame, we are continuing bullish price action. We just broke structure to the upside, but the 5-minute went bearish. That's enough for me to keep in mind that, hey, if I get a rejection of price happening around this area, I'm willing to take shorts, right? Because technically speaking, this area here, 5-minute zone, is still considered an area for shorts. On the 5-minute, it's bearish, even if the 15-minute is still bullish. So here's where we're going to keep going. We're going to wait to see how price is behaving. And I'm going to show you how I view multiple time frames, for example. So at this moment, for example, we are getting a change of character that's happening at this time. So for example, here we go internally. We take out that low, and that low, let's say, makes this high here. And that's fine. This is still happening inside. Technically speaking, right, this is the 5-minute swing. This is internal, this is weak, right? So did we get a reaction? We got somewhat of reaction, but we're getting continuation. So it's not something I'm too worried about. This area we could just say is internal. So we took some internal liquidity. Nothing really to focus on too much there, right? Now price gave us here, technically speaking, the range on this 5-minute time frame, is that high to this low, right? So if this high goes, that was a failed change of character, which is why I always say I like to look for two of them, right? So then we get a failed change of character. So guess what? Price continues its bullish price action, right? So in my mind, this was basically an early seller's trap, which is great. You know, not for the people that got trapped, but that's great to keep in mind what's happening, right? So in a way, we take the low and then we take the high. So this is a nice range, a bullish range that's developing on the 5-minute time frame. So we're just going to go ahead and highlight that as a demand range. So let's keep going. You know, prices once again looks like it wants to shift bearish. We get another change of character at the extreme. And guess what? It happens to be what session? London session is beginning, or Frankfurt is beginning to open. So here's what our change of character looks like. So now at this point, what I've seen is, and we haven't officially changed here. Let's zoom in so you can see, because I know my screen is, you know, sometimes it's a little small here. All right, so let's go with this first. So we've had an early seller's trap, which is building up liquidity for whatever's above. Now, if we look at a lower time frame, we might see a clean POI here, right? So let's drop time frames, and this is kind of how my thought process works. So for example, here I see this buy to sell wicks, right? And on the 4-minute, that's looking a little more clean. Let's go to the 3-minute, nothing, same. 2-minute, we have an actual candle here, order block that we could look at. Let's go to the 1-minute. Let's see. Okay, here we have a sweep, a buy candle that printed. So we can use this as our refined order block in this scenario. Now the imbalance, we don't really have an imbalance that's visible on this time frame, but it's the extreme, so it's valid anyway. So notice how the early seller's trap happened just below that POI. So this generated inducement for the extreme. And then now, here, what are we looking for? We're looking for a change of character anywhere in this zone. So we'll go back to the 5-minute time frame because that's, I think, what we were watching. So let's keep going. Let's see if this takes it. Notice how this doesn't give a 5-minute change of character yet. Now remember, the 5-minute structure is bearish, but 15 minutes still bullish. So more than likely this high will get taken out. Okay, there we go. So the high is taken out. The 5 minutes still is internally here. It's bullish. We didn't get that 5-minute change of character here. So now what I'm looking for in this case is, because we have that new high here. Let's move it to here. This high would have to go, or this low would have to go on the 5-minute time frame. So here's what I'm looking at. The moment that I see this happen, I'm watching this, I think, on the 15-minute time frame from my bed. So I can see that we wicked the top. And at the moment, the way I see this is that more than likely, I can see that there's a lot of liquidity here. For example, let's highlight the liquidity that is internal here that we could easily target. All of this area here is free for the taking. So I'm going to double this here and increase the size of this so it's easy to see. All right, that's liquidity. This is all internal. This area should have gone, but now it's basically become a demand zone. And now we've taken the high. And whenever I see price moving as it is here, for example, I can see that right now what we're doing is we're building some sort of trend line. You see this? This is easy liquidity for the taking, especially knowing that this is happening during Asian session. So Asian session built all this up, right? London session is sweeping the New York high. What's more than likely to happen is that price is then going to reverse, go bearish, take all of Asian session, take out this internal weak liquidity, right? And then come back to fill this imbalance. That's what I'm thinking. So once I see that, I'm going to look at higher time frames. So then I pop over to the 1 hour. And look at this, I can see some pins forming. So I'm thinking, okay, maybe we have a 2-pin or 3-pin formation occurring. I said if this high is on the 1 minute, it's about to print in a few minutes, right? This was like maybe 5 minutes prior. I said I can see that there might be an opportunity here, so I'm going to drop and watch, see what happens on the 1 minute or the 2-minute time frame. So for example here, let's clean this up a little bit more. On the 5 minute, this is the 5 minute low and this is the 5 minute high. So when I'm looking at price on the 1 minute, I also can say that, look, this was the extreme high on the 1 minute. We take out that high. So if I'm going to get a reversal, because I'm seeing that the 1 hour candle might close bearish, and I also can see, for example, that the 15-minute candle swept the highs and we're showing some sort of weakness, I said if I'm going to go short, all I need to see is this area to go. That would be my change of character on the 1 minute time frame, because what am I doing? After we break structure, all I'm looking for is the most recent range to see when it reverses, right? So at the current moment, this is the swing. Now obviously I've already traded this, so I already know what's happening, but this is what I'm thinking when it's actually happening, right? So this is how my trade was actually going. And I did this on the phone. So let's continue price action. Okay. So now we're getting a reaction. What are we reacting to? Let's remind ourselves what flips look like, right? So this area here is a sell the sell price action. Took the high internally here to the left, whatever happened, engulfing to the downside. Price then came up, tapped, reacted to that sell to buy, formed this bullish, a doji candle. I almost forget what these things are called sometimes. We have a fair value gap and imbalance. Price taps, is forming a reaction. The question is going to be, what's the next move? I'm trying to look just to see, what time frames I can see clean price action. I'll jump between like 1 to 3 minutes. On the 2 minutes, check this out. Here we can see this candle here. It's extremely long wick. That looks like something that we might react to. So I'm just curious. I want to see what's going to happen next. I want to see if it's going to change character. Boom. All right, so now at the moment, what am I looking at? This was a swing on the 1 minute time frame. So once we break structure, I'm looking at lower time frames. So the 1 minute just gave a change of character here. So then what am I looking for? I say, okay, we have this area here. This one tapped. This is like a doji candle. Push to the downside, generated reaction. This reaction didn't take any liquidity. Here you can see, for example, that both of those wicks are lower than the previous. More than likely, we're going to sweep something here. So liquidity to target. So I'm looking for this to get taken, right? Now at the same time, doesn't mean it has to, because on other time frames, it doesn't look like that. For example, if we go to the 1 minute too, on the 1 minute time frame, we do have this area here, and so price can maybe even just be satisfied by tapping this. At the same time here, on the 1 minute, we get that reaction, we pull back, this candle trades higher than this one here, so maybe this is enough, but then we have an inside bar. So I could also consider maybe this could be tapped, this would be swept, and then price just drops. So I don't want to miss out, right? So either price is going to do something like that, or something in here, or I'm going to be wrong and it's all going to get taken out. So let's show up with what I have here on my actual chart. Would be 2. That's the notes here. All right, so these are the same markups that I had. So let's continue with this, right? So you can see what my entry looked like. So I set a limit here, right? And I believe I'm doing this from the 2 minute time frame. So 2 minute, this would be the area that I want to cover the high. Now, and this is a pretty big stop loss in my mind. It's not something that I'm usually comfortable with taking, but something like this, in this case, would be all right. So let's say we did, I think it was a 6 pip. So let's go like this. Okay. And then what am I looking to target? So let's make sure the visibility on this is high. Perfect. So if I'm going to take shorts, what am I looking at? All right, we would just have swept this high. This is a 5 minute bearish push to the downside. right? If this high gets swept, that tells us what? That the low that formed that high is weak. And that was all formed internally here in this area. On the 15-minute, you really don't even see this that well, right? We make this high, we pull back, and it's all happening in here during Asian session. And we have all of this trend line that we want to sweep. So my mind is thinking, okay, I take that, and this is what's going to happen. I'm going to take out this low. That would be like an 11R trade. We put it back on R's here. You see that? Same setup, exactly the same. That's what I was looking at. So let's go back to the 1 minute time frame and see what happened. Let's play price. Alright, so we get in our entry. Price comes in, sweeps that area. Perfect. We swept. We're protecting the high. That's all that matters. On the 2 minute, very visible, very clean. This is what we're looking at to manage our trade. So let's continue. I want to see the 5 minute shift bearish now. And now what I've confirmed is this low that made that high, this high made this low. And on the 1 minute, this is a swing. And on the 2 minute, same swing. So if this is correct, then this high will not go. Boom. All right. Usually what happens after this, most people are going to set their entry to break even after you have that 1 minute break. I don't do break evens, not very often. I much prefer either it's going to hit take profit or it's going to hit stop loss. Now at the same time, we often leave POIs behind. Here we have a buy to sell. Here on this time frame on the 2 minute, you can see that we swept that high. So more than likely, price could come back to revisit this area and we could get either re-entry or retest. So if I set it to break even, why would I do that if that entry can just get stopped out, right? So let's just see what happens. We have all that trend line liquidity. All right, price is coming back. And I see that this happens with a little bit of aggression here. So sell candle is very strong, but price kind of gives us a V-shaped recovery. So I don't like that. So what that tells me now is I'm looking to the left what happened here. This was a previous 1 minute swing. Remember, this was the early seller's trap, right? So this is an area where it would be valid considering that we take the low and then take the high. This is strong. And we mark this out on the 5 minute. So something in this range provided that reaction. Price came in to what? Fill in some of this imbalance. And so more than likely what that's telling me is like, okay, this could generate a strong enough reaction to get this trade to fail. So, you know, this is a time where you can either choose to close your trade early or, you know, just stick with it. In this case, I stuck with it. Now back to my setup here. Let's go to, yeah. You can see same setup, right? Same exact stuff marked up. All right. So let's continue and see what happens. Boom. All right. So trade failed. We took our first loss for the evening. And this happened at London Open. So this was Frankfurt Open. We took short from Frankfurt Open, and then that failed. So that loss now taken. So now we have to reevaluate. Okay, what just happened? Well, let's hide this here. Now what we can do, and we can get rid of all the stuff that we've just recently marked up because it's not really that important anymore. So here's what we have to pay attention. All right, we swept the high here, right? You can see this wick. And now we've just, you know, another early seller's trap, and then we took the high. So the question is price going to return bullish, or is this another trap yet again to capture people selling again, like this one was, right? So in my mind, the way I see this as, okay, well, I have to play with the same level of aggression. I know that the internal price action has to come back to be swept. This high was already closed with a wick, so unless we close with a wick above this high, or with a body above this high, I'm not going to have a lot of confidence that price is going to continue long. So I'm really still looking for shorts. So what I do, at least on the 1 minute time frame, we have this break of structure. So for the 1 minute to go bearish, externally, for example, this would have to be the low that goes, right? Because technically speaking, this is the low that's making whatever high is about to happen. Now I see the same trend as I saw earlier. Here we can see that we are moving with aggression, and this is almost like trend line like activity, right? We're having small pullbacks, but very impulsive buys pushing price higher. So in my mind, I'm thinking, okay, well, where's the high going to be printed at? So we're just going to keep watching to see what happens. All right, we're already starting to get a pullback. So once again, now what am I thinking? Okay, let me see what is the swing. After we get that break, I'm looking for a change of character. So where does the swing originate from, right? We have the external portion here, but then we have the area that directly breaks right here. So this is a pullback that takes liquidity from the inside bar and the sell candle, and it prints and stops here, right? So this is the swing, right? We pull back and then we break. So if price is going to come back here, then I have to see for a change of character that low to go. So once again, I'm playing the same rules. We're looking for a change of character. Let's see what happens. Now once again, same thing as before. This is the extreme. We could generate some sort of reaction here. Right now this is the wick. This is the full body. Here we've already tapped it. Here we tapped it again. And this was the reaction we generated out of it. So price could have a reaction anywhere here. And this is a strong demand zone that broke structure, right? So this would be an area where most people would look to go long, right? But we know to the left that, hey, this close doesn't look like it's going to be very strong. We have liquidity below on the higher time frame. The higher time frame is going to pull price lower. This looks like a trap now initiated by London to sweep the Frankfurt high, to sweep the Asian high, right? And then potentially take everybody out from the game. So let's continue. All right, so we're tapping. Now we're observing for a reaction here. Okay, and we take it out. So do we have a reaction? We don't have a very clean one. Now on this time frame, for example, I'm dropping between the seconds time frame and this while on my phone, but we're still looking to see if we can find anything that looks clean, because just because we have a 1 minute change of character, right, doesn't necessarily mean that we're going to go short, but we're just keeping this in mind. So this kind of looks like a V-shaped recovery, just not as aggressive and as impulsive as the one that happened here that took us out previously. So we're keeping that in mind. We're going to observe to see what happens next. Okay, boom. What do we have? So we changed character and now we swept liquidity. Now a lot of people might not notice something like this, but this is exactly what I saw when I was looking for an entry. Whenever we get a sweep of liquidity, let's make this a little bit larger. Whenever we sweep a previous candle high, especially one that directly breaks or changes character here, for example, what that's telling us here is that we're loading up some shorts. We took some liquidity, so we satisfied the need for a pullback. This is actually going to create another pullback on a different time frame. So for example, we had this. Price comes back, gives a change of character with very little, no visible reaction on the 1 minute. But then what do we have? We have some sort of sweep, right? And when we have a sweep, usually what that's defining is this is going to be a, let's say, a valid pullback for continuation. So if we start to see that there's a sweep happening, let's say on the seconds time frame like that, we know that more than likely this low is going to go because it prints like this. It's going to print in a bearish way. So if we take that as an entry, right, we can be sure that if price is going to drop, right, and then pull back eventually, that area is going to be, let's say, the high that's going to be respected as a swing. So that's what I'm expecting, right? So I don't know if that made sense. Hopefully that made some sense. Let's look to see what I was seeing here. Same thing. I marked out the same sweep. You can see with this thin line here. I'll make it a little bit thicker so you can see. See that? That was a sweep that I marked out. And in this case, all I needed was an entry that would satisfy enough of a protection for a drop. So for example, as soon as that candle closed, we take an entry. And I think, how much was my stop loss on this one? I would enter at the bottom of the candle as it creates a new one. And then I think this one was, again, like a 6 pip stop loss, which is huge, much bigger than I'm normally comfortable with. All right, so let's see what happens here. we're waiting for the entry at the break of that candle if it continues lower. And then we're in. So we've entered at the low of this candle. That's our entry. And now all we are doing is we're expecting this high to hold. So as long as this high doesn't break, which is going to be the start of a new swing, what are we looking for? Same thing as earlier. This would be the 1 minute to shift price bearish externally, right? Because this is the lowest point that broke that structure and created a new high. Same thing we're looking for earlier. We want to go to the higher time frame, and we're looking for a sweep of all this internal liquidity. So that's what we're looking for. Another opportunity for an 11R trade. So this is our second entry. So as soon as this happens, we have this. So this is confirmed. So now at this moment, what are we expecting? We break that downside to the downside. We have a change of character on the 1 minute externally. So now the question is going to be, where does this low print? Right? Is it going to print here? Is it already going to start to pull back? Because in this case, for example, from the high to the low, right here, let me make this thicker. That would come back to our entry, which is fine, right? Because guess what? We leave behind a point of interest here, because this area took liquidity and did not come back to get mitigated. So price could very easily come back to our entry. Once again, why we do not set to break even, especially when we're targeting with higher time frames on a lower time frame entry. So let's see what happens. Now around this time, around 1 a.m. is when I go to sleep, right? So I'm going to sleep, and I'm keeping in mind, if I'm looking to the left, areas where we have some liquidity printed, right? So we have that big trend line liquidity that we saw earlier. So liquidity target, all of this area here. But usually what we can define is that there's areas where there's pullbacks directly. For example, let's go to liquidity target here. So here we have a pullback before we have that continuation. So this area in particular is going to have a storage of liquidity. Sell to buy price action. This was a pullback, valid pullback. So we have liquidity here that we could sweep, and then we have liquidity here that we already swept, right? So those two areas are areas where we could generate reactions to. So once we take out this area, which is an early seller's trap, right? We've now created, let's say, we've defined that on the 5 minute time frame, we have this low to this high, right? This is 5 minute high now, and once we broke into the downside, we have, let's say, for example, on the 5 minute time frame, we could define something like this. So price could come back, and it could even take us out just to mitigate that extreme, but still continue to the downside. So that's what we're expecting, something like this, and we're hoping that this area is valid to hold price, right? So we're going to continue. Let's see what happens. And around this time, I'm already going to sleep. I remember I woke up at like 3:33 in the morning, and so we're going to wait. I'm not seeing any of this, right, because I'm asleep. I went to sleep thinking that this trade was going to hit take profit. And now this is getting close to the time when I wake up. All right, so I wake up around this time. It would be 3:30, so let's extend this a little bit more. Awesome. So here we are. All right, so I remember around this time, this is when I wake up. So at this moment, what can I see? I look and I see that we've come to react to this area. So this was another area. This is a pullback where we took liquidity before creating this very aggressive impulsive swing to the upside, right? So it makes sense that we're going to take out this area of liquidity, but we could also generate a reaction. Right now on the 5 minute time frame, for example, now we're still viewing it from the 1 minute, but we know what the higher time frames look like. So for example, we have this high, we have this area here. This was the pullback, confirming what? That this area was valid for a pullback, tapped the 50% right here before breaking to the downside. So now what do we have? We have this high and we can go like this. This swings from this high to this low, to this high, this lower high, to this lower low. So what would be the natural continuation of this? Something like this until we take out that liquidity, right? However aggressive it is or it isn't. So the question is this going to be where we print, let's say for example, the lower low and then have to pull back for a lower high or not? So at this moment, this trade is currently around 7R in profit. It's not worth it for me to close because, you know, first of all, 7R is not a lot, but in general, this area still has to be satisfied. And if we've swept the high already twice and we've shifted bearish on that time frame, we already know that more than likely this is going to continue and make sense. So I go back to sleep. Let's keep playing price. Sorry, I'm drinking my smoothie at the same time. So that was super aggressive. Price came back to what? To mitigate the previous lower high. And it did so with so much aggression. That's crazy. But we're still in this trade. And I think, yeah, I was still asleep. And we get taken out. That's horrible, right? So we get taken out. Basically, our point of interest already had a reaction, held, breaks to the downside, price comes back, retests our entry, valid, pulls back. But look, this was so impulsive. This is that buy candle that really pushed up, and then the sell candle as a response. This failed to break structure to the downside again, especially with being that the swing was here. From this, we pulled back a little bit before sweeping to the downside. Fake change of character again, takes the high. So that's not looking good. So I'm still asleep while this happened. So my 7R trade failed, or my 11R trade failed from the 7R point. So here's what happens. It's 15-minute chart time now. So we go back to the 15-minute. Let me get rid of these curve signs here. So at this point, we have already hit stop loss on that one. So let's hide that entry. And then we get rid of this here. So let's go to this time frame here. And then I wake up around 8 o'clock. So let me set this up to that 8 o'clock time frame, around 8 something. Let's go 8. Oh wait, is that already it? I guess that was around the time. Let me see where the third one was. My third was, maybe it was 9 o'clock, 8:45, so around that area here. Alright, so let's go back. Alright, so what can we see here on the 15-minute time frame? Ignoring everything that's to the left, not too important here. Let's go ahead and hide some of this stuff here. It's kind of annoying. Alright, so what we can see here now is on the 15-minute time frame, we've created a new structural high. Right, this one broke with the wick. That's the first entry that we took that lost, right? And then here, what do we have? Let's use this tool. Then we get the confirmation of that break, which is the second one that we took a short on. We actually took the short on the 1-minute time frame here. Remember, we retested, we break to the downside, then price comes up and sweeps us. All right, so here we have the 15-minute change character. So notice that we break structure, right? 15-minute change of character here as well internally, right? So we take this one. That's with the wick. So 15-minute change character, early seller's trap, 15-minute. Takes the high, then 15-minute sells to the downside again. So now we have 15-minute valid shorts. We had an entry here, but we got swept out of it because guess what? This served as liquidity for the extreme. Price came to tap that extreme. But now what do we have? We take liquidity with the high and then we take the low. So now we have a new range that we're trading in. We have this high and we have this low. And more importantly, guess what happens? We come back to retest it, but we still have yet to take all that internal liquidity. Whoops. This one's what I'm looking for. We have yet to sweep this, so still valid for shorts. At this moment now, what we're trading in is this high. Let's make that thicker, and this low. So 15-minute is bearish after we break structure. Order flow is bearish, right? We have confirmed with this. Now we have what? Another, this would be sell to buy, right? So now what we're doing is we're forming a supply chain. 1, 2, 3, this could be 4. And guess what? This low, if this low fails to break the high, which we're already pretty much here, then guess what? The low is weak, the internal liquidity is weak, so this should break to the downside. That would make sense. Now, if we take the high here, then that's a whole different move because we've taken liquidity from the highs, the lows, we break to the upside continuation. We can't really take longs from this area anymore, so that would be a whole different setup. So let's go to the 1-minute time frame or the 5-minute. Let's go 5-minute. So on the 5-minute, we can define or refine that 15-minute to this. We didn't go with the wick because it's a little bit above, swept that area here. Sweep of liquidity. So usually I'm going to look for something here. So here, for example, I had another trade that lost. Let's go, be right around that area. Okay, so let's look at this in this format. So we're going to zoom in here. Watching this on the 5-minute, this is from my bed, so I had just woken up. It's around this time. News happens at 10 a.m. So we are a little bit more than an hour away from news, right? And if news happens like the day prior where I took my 23-hour trade, it will explode to the upside. At this moment, we already have lots of selling that's happening. So we could also be in a large distribution of price action, right? Which would make sense. Price could just continue to the downside after this. So let's go with this. On the 5-minute time frame, we currently have, let's say for example, this is what the structure looks like. Let's go with that. And then we're going to make this a little bit larger, 14. All right, 5-minute, we pull back, we push to the upside, still going higher. So at the current moment, this would be a 5-minute, right? And of course, we come into that extreme. So what does that mean? We're going to drop time frames, go to the 1-minute or so. Let's go to the 1-minute. All right, so that's the 5-minute. And here, what do we have? So this was a push to the upside. We tap the point of interest. We give a reaction. Technically speaking here, for example, on the 1-minute time frame, if price is going to go bullish, this high has to go. If the 1-minute is going to go bearish, this has to go, right? Because this is the swing. Remember, we're always looking at internal swings, especially after a break, right? Or when we drop time frames. This is the swing. Anything that happens in here is internal, right? So what we're going to look to see is this reaction is going to generate what? Generated a bearish candle. So here we have a sell candle. It's not a strong selling candle because it hasn't broken anything yet, right? But it's a reaction to the supply on a 15-minute, 5-minute refined POI. Makes sense? Okay, so we've generated that reaction. Internally, here we can see that we have a doji candle, a buy to sell that's engulfing, that takes this internal liquidity, right? Price comes in, taps, pulls back, takes that high. We have an internal, right, bullish price action. So internally, this high that made the low now takes the high internally, right? Doesn't take that external high. So now, in this case, for example, in this scenario, I'm going to look for an internal change of character from this low, right? Hopefully you guys can see that, right? So internal order flow is bullish. External 1-minute is bullish. So for the 1-minute order flow to shift bearish, that has to go. Now we're in this area here too. So let's just watch what happens. Shoot, that's crazy. All right, so guess what? We have one change of character. When we have the secondary point, we have a shift. I always talk about the shift is 2 points that are responsible for making a high. 2 points of liquidity taken. We now have this extreme. So what we want to pay attention to is what reaction do we get at this extreme. This area here is the external part, this is the extreme of the buy swing on the 1 minute time frame. So here we have to be cautious because guess what? Order flow is bearish, but structure is not. So guess what? Are we looking for a short from here? Not necessarily yet, but what we can expect is a reaction, right? Because something happened here that caused this. So we're just keeping in mind because we've already tapped the 15-minute refined 5-minute POI. So what does that mean? We go to the 1 minute. Oh, look at that. Do you see that? That's very small, but we took that 1 minute external liquidity. This is the lowest point. We've changed character now on the 1 minute time frame. Structurally, now we have this high is making this low. So the question is going to be, is this pullback going to be a sweep of liquidity, an early seller's trap, and then make a new high? Very possible because we have equal highs. Very likely that could happen. But the reason why we're willing to take a chance here is because this is a POI that's refined at an extreme of a 15-minute, 5-minute refinement, right? So we go to the 1 minute and we can be more aggressive because this is the area where we can expect a turnaround. So now let me go here really quick to see where my entry would have been. All right, I remember now. All right, so let's keep going. All right, so now we have confirmation. So this high, right, shifts change of character to the downside. Now we have a smaller, this is part of the pullback, but this is a little smaller, but it's still part of the pullback. Price pulls back into premium pricing, breaks to the downside. We don't know where price is going to start pulling back from, but it already broke again. So now we have that break of structure. So we have this area here, right? Technically speaking, this area now becomes protected. So now the range that we're looking to trade from is from this bearish swing, wherever this stops until, right? But that's where the breakout happens. Now here's the problem. We can be very aggressive and we can take a valid trade from here, but we also have to be aware that we have an imbalance above and an unmitigated extreme that was responsible for change of character. So we could do one of two things. We could try to take a trade when price comes back in. Doesn't mean it's going to mitigate this inside bar. But let's say if price, we want to take a trade, we can wait and protect this high, which is already going to be about 5 pips. Or we can go here and get an almost 9 pip stop loss we would have to have, which would be a little aggressive. Or not, sorry, the opposite of that. A little too conservative because look, we've taken 2 losses already, right? For just an 11R target. It wasn't even that big of a target. So it simply doesn't make sense because at this point we're going to half what we were getting. So at the minimum, what we'll probably do is we'll take a trade here with something like this with a slightly smaller stop loss, right? Or at least 5, 6, whatever pips we ended up going with. Let's look at what I actually had. It's probably around 6. All right, that's what I did. So what I did here in this case, for example, I wanted to be safe that I would get an entry because price could very much also leave behind an imbalance like it did above, could leave an imbalance somewhere here. So I wanted to get an entry, so I'm just going to go ahead with that because this was the area where we reacted to. So let's see what happens. And then I did cover this high. I always try to cover the high that I can, right? So let's just say that's like 6.3. Okay, boom. So here we already got our re-entry. Or not a re-entry, we got our entry, our first one. So we're expecting that to hold. And same thing as earlier, we are targeting the same POI. Because guess what happens? This is the 15-minute swing. Order flow is bearish. We're at the extreme. This has to take out, the first target would be this 15-minute low and then the liquidity below. But now our potential previously 11R trade will now be less than 10R, 9R, which isn't the best. We've already taken 2 losses, not our favorite. Now this is the 5-minute low that we're expecting to go. So let's watch what happens. All right, so this isn't looking good. We have wicks, which are loading up buys And in a way, when this is happening, you can even see I marked out, I believe I still have it, the liquidity. This is liquidity for the taking. So I'm already losing some confidence that this might not be the setup. We mark out that liquidity. And then what am I noticing? It's more than likely possible that on the 1 minute time frame, this will serve as inducement for the extreme. So if this trade doesn't hold, I'm willing to take a trade from this very small 2.5 pip, I think is what it looks like, right? This is a 2 pip stop loss. So I'm going to slightly cover that because GU for me has a 0.5 pip stop loss or 0.5 pip spreads. So I'm going to cover it by, with a 0.5 pip plus 2 pips about. So 2.7 pips just in case, right? So I'm setting a limit there because if this fails, this is it. Otherwise, it's going to explode to the upside. The 15 minutes going to go bullish, and that was a whole bad session, right? More than likely, I'm going to be right, but otherwise I wouldn't set that limit. All right, so I can see price is kind of behaving. It looks like maybe I'm going to be right. As long as this high doesn't break, I'm going to be fine. And I see it testing. And here's the area where I'm looking for. What am I looking for order flow wise? Here we just formed, I can just use a box. Look, price pulls back, takes some lows, takes some highs, respects the extreme. We just formed a potential buy to sell order block inside bar. And if we break to the downside, this is it. Then I'm good, right? So that's what I'm thinking. I'm thinking this is going to be a good area. If I thought that this would make sense, I could even take a trade long, or not a trade long. I could take a secondary entry if it made sense. But at the same time, I would want to cover that high, and that would be too big at 9 pips. So we're just going to see what happens. Boom, price comes in. Here we have our entry tapped. Price respects that high. What do we have forming? A supply chain. 1, 2, 3, 4 taps. At this moment, what happens now? My last trade hit stop loss. That would have been a 9R trade. That one failed. And now what do I have? This area here, same. Early seller's trap just before the extreme. So what do I need to see now? At the current moment, on this time frame, now we've broken that structure point, or the order flow. This is now the low of the pullback that breaks structure. So in a way, this is now a bullish order block, right? We could see it as that. So now, for example, we have this sell to buy price action that breaks the high. And now what we have to do is, okay, if price is going to hold my entry, this is the last area where I'm willing to take a short from. This low has to go, right? And so at this moment, we've already been tapped. So let's see what happens. All right, tapped. Look, well, we swept liquidity again. In this case, we've swept some liquidity. Now the way it's printing, it looks a little different, but let's see what happens. Comes back to retest. That doesn't look very good. Okay, it's gonna happen. And then now I remember this is the news time. So this is 1 hour before news. So I was in this trade with a 2.7 pip stop loss for almost 45 minutes before anything moved, right? So I got this trade at 9:17 a.m. I have the timestamp on my Instagram story. It's on my highlights with the MT5 entry if you want to see it. So you can see it, but anyways, same target. So we're not even sure if this is going to hold now because of the news. Now, the previous day we had a spike due to news. Remember, same target as before. The previous day spike we had, what did the news look like at that time? I'll show you right now. This was the spike from the news. So on the previous day, my 23R trade, I had an entry like somewhere, where was my entry? I don't remember. I think it was during Asian session. I think I had an entry here, somewhere here. Price came to retest after going all the way up here, pulled back. Then it started holding, so it was fine. I still stayed in that trade. It was a pretty long trade. I kept it through the night and it didn't get taken out. News came out, and this was the move that happened because of news. Right? Very extremely bullish push to the upside. Led for a rally that ended up being about 100 pips. So in this area where we have what? Lots of sellers or lots of sell orders being distributed, we've already taken 3 losses. We are 30 minutes away from the news. What can happen? Anything can happen. Price could very much just explode to the upside and drag us for as far as it wants. But because I understand that no matter what the news is going to be, the setups are already happening. So at this moment, what I've already seen is we've swept and made a 15-minute high. 15-minute structure is now shifting bearish. 15-minute order flow is bearish. We're in an extreme. We're having a large distribution of orders. The banks are already putting their orders in. It's very obvious by the way that price is moving. They're using this area for the next 30 minutes just to continue loading up some orders. So we just see price play around here. And this is all internal. Now at this moment, kind of the same thing that I look for. This high is not confirmed because it has yet to break anything. So let me make this darker so you can see it. So this is the unconfirmed high that's supposed to be protected. Very easily it can get taken. And then this is the low, the confirmed low that made that high. So price is inside this range for about 30-45 minutes within an 8 pip range. And we're just sitting here waiting. Boom. News hits at 10 a.m. and we have that official change of character. So now that that low is taken, guess what? We finally have, after 45 minutes, a 1-minute change of character. And this high is confirmed strong and, price is confirmed bearish. So let's go back to my actual entry. You can see the same setup. See that? 2.7 pip stop loss. Awesome. So same markups exactly. That's nice to see. I think the same. All right, so now what are we doing? We have 1-minute change character, the protected high, and we do have a little bit of room above that just in case price pulls back. Now here's the cool thing. On all the previous entries, our stop losses were about 6 pips. And the reason why is because we didn't have such a refined small order block as we did in this case. But here we were able to get in with a 2.7 pip stop loss. So let's keep watching what happens with price. All right, we get a good pullback here. All right, price is playing around. We've taken these relatively equal lows. All right, here for example, we have some V-shaped recovery. We could potentially get an entry, something there if price comes back. But now we're about to play with the extreme here, right? So anything could happen. Price could, because of the news, give us an entry here to take out all of the sells that happen. But at the bright side, what we can see is that, price action is distributing very nicely over the drop on the 1-minute time frame. And then boom. We are taken, hit TP, that area swept, 24.44R. Based off of the way that I had it set up. We can show our original one here once again. Same setup. Pretty nice. Look at that, same. Awesome. So that's what the session looked like. So hopefully that video made sense. Let me know if you have any questions. This is what a typical trading session looks like. We had 3 losses, 1 win. The trading occurred over a 12-hour period. During London session, we took 2 losses, trying to short off of the 15-minute week high. During New York session, stop loss was hit. During late New York, about an hour before news, when we were at that extreme where order flow shifted, we took 1 loss and we finally got our win for 24.4R. 3 losses, 1 win, net 21R for the session. Let me know if you have any questions. I'm going to put the link to the TradingView charts at the bottom in the description, and I'll catch you for the next video.